Let's head over to CommSec. Tom Piotrowski with his eyes on all the numbers today. Yep, it is rates day. How will that affect things, Tom?
Oh, Pete, in terms of what we've seen overnight, we will see the local share market kick off rather flat this morning. It's the eve of a big holiday in the US, the 4th of July. So markets closed a little bit earlier. You know what that's all about.
Yeah.
You're
had a few July
yourself, really.
Had a few July 4 parties myself in my day.
I can imagine you with your foreign correspondent epaulets.
Bit of pumpkin
doing
pie.
Nicely at those sorts of.
Yeah, had the works.
Yes.
Yeah, all those sorts of things. Anyway, proceed. Sorry, Tom.
No, that's okay. So regardless, Pete, the momentum of the market was a little bit underdone. The Dow is just in positive territory. The S&P 500 up by around 0.1%. Technology stocks continue to outperform, which has been a theme lately. But the economic news of the day was a bit of a clanger. The survey of manufacturing activity, according to the Institute of Supply Management. It's an important survey. This showed that activity continued to contract where manufacturing was concerned. So this saw the new orders measures, employment measures, production measures, all at quite a low ebb. So you would have thought that under those circumstances, interest rates had dipped. They did briefly, but then they pushed higher. And bear in mind that we're on the eve of an interest rate decision as well in the United States later on in the week. So two-year government bonds are up by about 6 basis points and 10-year bonds up by about 4 basis points. That's not what you would expect in the face of a weaker pulse where economic activity is concerned. European markets were slightly negative. The German market down by around 0.4%, the French market down 0.2%, and the FTSE in London just in negative territory. Of course, a big decision today at 2:30 when it comes to rates. Look, yesterday, Pete, we saw rather solid housing data. The home lending figures showed that owner-occupied refinancing at a record high. The overall lending figures were quite a deal stronger than what the market was looking for, 4.8% compared to 1.4%. At a time where home prices are increasing, there are rental shortages. It'll be interesting to see whether or not this is the factor that skews the RBA in the direction of a rate hike when everyone else is thinking that nothing will happen.
Will that be the key point, Tom? CBA, they're still of the view that there'll be a pause today, right? Have I got that one correct? Yep.
You're spot on, Pete. Yes, and the line ball decision we're expecting that rates will be on hold, but 2 more rate hikes coming down the pipe at some stage.
Okay, get us to 4.6. Okay, Tom, thank you. We'll talk to you soon.